All right, hello CFM. All right, so today's lesson focuses on calculating a person's tax liability, which means how much tax a person owes, right? And you should have already watched a video that gave a brief overview on how this works. And the main takeaway from that video was that income tax in the United States is a progressive tax, meaning that as your income increases, the tax rate increases. All right. I have the 2018 tax brackets in front of us. It's 2021 now, but they're really not that much different. They change from year to year, but for our purposes, this will work. All right. So, how do we actually come up with a person's tax liability? We're going to look at an example. You are single with an adjusted gross income of $60,000. All right. So this is your adjusted gross income. That means how much you made throughout the course of the year. We might have subtracted some medical expenses, retirement, investments, that sort of thing. Anything that's exempt from income tax. You claim the standard deduction for a single person. Now this is important. So it's 2021, and the standard deduction for a single person is $12,400. And remember, that's an amount of money that no tax is owed. All right. What is your tax liability? All right, so we want to figure out how much this person actually owes Uncle Sam. So step one, we need to find what this person's taxable income is. So we're going to take their gross income and subtract the standard deduction, $12,400. All right. And, we could do this mentally, but it's the end of the day. Let's take a calculator out. So 60 grand minus 12,400 should be 47,600. 47,600. All right, this is a person's taxable income. All right, this is what their tax is going to be based on. All right, now we need to use the tax bracket. So 47,600. Remember that number. Now looking at the bracket, it's broken into the different classifications. We have single, married filing jointly, head of household, and married filing separately. All right. Notice there's no widow or widower that we have in our notes. That's because that would qualify as head of household as long as you have a child. All right. So let's do this. All right. This is a progressive tax. Here's the single bracket. So these numbers, these intervals, are for people classified as single or filing singly. All right. So the first $9,525 that this person makes is going to be taxed at 10%. All right, so part of this person's money will be taxed at 10%. So let's figure that out. So the 10% tax rate, we are going to do 10% as a decimal, 0.1, times all of that money, which is $9,525. All right. And that should, I don't need a calculator for this because I can multiply by 10% in my head, but 9525 times 0.1 gives us $952.50. All right, so this is the first chunk of tax that this person owes. All right, they filled up the whole 10% bracket. The next bracket is their money from $9,525 to $38,700. All right, this is where it gets a little trickier. So we're in the 12% bracket. So we are going to multiply 12% by that income. So 0.12 times that money that falls within that interval. Now we have to do subtraction, all right, because it's not 38,700. It's 38,700 minus the 9,525 that was already taxed. So $38,700 minus the 9,525 that's already been accounted for. You take out your calculator here. 0.12 times 38,700 minus 9,525. All right. The next chunk of taxes they're going to owe is $3,501. $3,501. All right. So that took us up to $38,700 of their income. All right. Now, we need to find where the final amount lies, 47,600. All right, so we go up to our numbers. 47,600 falls somewhere in this bracket, which is the 22%. All right, so notice that this interval goes from 38,700 to 82,500. Now, this person only made 47,600 in taxable income. All right, so really they're going to be capped off somewhere in here. So 22%. All right, so we're going to do 0.22, that percent is a decimal, times the amount of money that gets taxed at that rate, which is 47,600 minus 38,700 that was already taxed. Remember, that amount was taxed at the 12%, and some of it was taxed at 10%. We take our calculator out. 0.22 times 47,600. Oh, I need parentheses here. 47,600 minus 38,700. Enter $1,958. $1,958. All right. Now we're not done. We're not done. So notice, they paid 10% on this chunk. They paid 12% on this chunk. They paid 22% on this chunk of their income. All right. Now we have to add up the total taxes. So we add these three values up. All right. So we have $952.50 plus 3,501 plus 1,958. And that gives us a total tax liability of $6,411.50. $6,411.50. All right, that's how much this person should have paid in taxes. So when this person gets their W-2 back, which is a summary of how much they made and how much tax they paid, all right, on that W-2, if it shows that they paid more than this amount, they will get a tax refund. On that W-2, if it shows that they paid less than this amount, it means they still owe the government some money. All right, so they have to pay in. All right, so this was a quick overview on how taxes work. Remember, it's a progressive tax. All right, you pay 10% on a certain chunk of income, then the next chunk you pay 12%, then 22%, and it goes all the way up to 37%. So remember, if you hear someone say, oh, I'm in the 32% tax bracket, well, really they're not. All right, effectively, they cover all these tax brackets. It's just they fill up the 10%, they fill up the 12%, they fill up the 22%, and so forth. All right, make sure you guys complete today's Google form. Email me if you have any questions.